Right. Morning all. Welcome back. Welcome back to Morning Kappa. Aiman here. Right. So, looking at the S&P 500, well, it rose around 0.4% on Monday's session, hitting another record high. Well, the rally was led by the tech and also the AI names, especially after uh, the AMD doing a major chip deal with the OpenAI, right? Which also reignited the optimism in the semicon space, right? Also, despite the US government shutdown recently, so the market shrugged off with the political risk and also lean into expectation for further rate cuts. Also, uh, we see that the continuation for this tech-driven strength, which might also flow into the local market as well, right? So sentiment is positive. Well, looking at the charts right now, uh, now that the 6,700 level has surpassed, right? So do mark the next resistance at 6,800 if the next for the next resistance if the index to travel higher. So for now, the S&P 500 looks pretty much bullish with support stands at 6,700. Right. So looking at the US trading stocks that you have published yesterday, overnight, right? So we published Ramaco Resources, METC. So the stock is on its breakout formation, reaching the $35 level. So we can expect that the stock to travel towards the $40 level on a strong momentum, followed by the next resistance at 44 US dollar level. Right. So now if the counter reverse, do watch out for the 31 US dollar level for the immediate support. Also next we have Coinbase Global coin. So looking at the charts now, the counter experience its follow through momentum from the couple of the previous session, jumping higher above this $350 level and eyeing for the immediate resistance at $400 level. Uh, if the stock climb up higher, we could see that it might travel towards the 450 level. Now, if the stock slide below this $315 level, this might signal to a shift to a bearish structure, right? So, thirdly, we got Vertiv Holdings, VRT. So it reached its immediate resistance at 155 dollar level, and now it is on track to test the next resistance at $170. So second resistance is at $180 level. Well, if it trended lower below $140 support, do watch out for any attempt of reversal. And lastly, we got BIIB, so it trended higher uh, to break out above the 150 resistance. Now, if the momentum persists, it will reach the $165 level, followed by 180 resistance. Do watch out for 140 support level. Right, so we have 4 US trading stocks for today. To breakout, pre-breakout, sorry, all of them are breakout, right? Okay, so looking at the WTI crude oil futures, right? Well, it rallied on uh, yesterday's session, which is on Monday, right? After the OPEC Plus opted for a smaller output hike than expected, which also elevated some um, oversupply fears, right? So, also geopolitical pressure on Russia also added a risk premium to the prices. Well, I think the price now is constructive, right? Though we keep an eye on the demand data and whether supply is actually hold back or the other way around. So uh, at this juncture, we keep our positive trading bias, expecting the price could travel higher towards the $65 level, right? So first support and also our stop loss remains at $60 level, and we saw that uh, it has rebounded from this psychological threshold, right? So coming back to Malaysia, so the FPLI edge higher at close yesterday. Well, the modest gain is likely driven by the strength in tech counters as a whole, right? And a broader Asian market momentum, along with the raising hope for US rate cuts, right? So I think buying in blue chip sectors is probably supporting the lift as well. So we continue to see the positivity in the market, and still watching for confirmation, right? So in terms of the uh, technical charts, right, resistance remain steady at 1675 points, followed by 1700 points. So near-term support is at 1570 points, followed by 1535 points, right? So looking at this wave, I'll call this as a wave, right? So um, uh, if any pullback to happen, I saw that this 1616 zone to be the lowest zone for now for any pullback, right? So yeah, this is our watch list. We added some telco names. We have also tech names and uh, some consumers, right? Right. So if you follow my presentation from last week, right, I keep mentioning that to take a look at the telco uh, this week, right? So tracking on the telco index, we see that the index now been trying to attempt a bullish breakout at this so-called the second gap, which is around 501, 500, 501, right? Level. So yeah, looking at the Maxis charts, right? Well, true enough, it breached the resistance at 3 ringgit and 70 cent on the previous session on Friday. Yeah, on Friday. And now it potentially to continue its bullish trend towards the 3 ringgit and 90 cent. However, in the event of any pullback to happen, right? If you look at the normal Fibonacci pullback that I use, right? I think 3 ringgit and 65 cent could be the lowest zone for the pullback before uh, it rebound higher. So I, I think I believe at this juncture, right, the bullish is confirmed, right? So also looking at the Celcom DG or CDB, right? On the other hand, well, this is a different story, right? Now, I think that the stock is now on its initial move for the uptrend. So the reason why I said it is because if you see here, there's a potential reversal pattern happen of form, which is the double bottom, right? So apart from this pattern, the bullish market structure also appear, which is the uh, what you call it, the high structure, right? And also there is an engulfing pattern from the later session yesterday, right? So yeah, keep for this week, uh, keep these two big names in your watch list, and also I'll keep you guys informed if any significant move about to happen, right? For Maxis and also CDB. Right. So for the Malaysia trading stocks, we have four stocks to recommend today. And firstly, we have Pavilion REIT. So the stock uh, is in its breakout formation at 1 ringgit and 90 cents. So with that, we expect the momentum to remain steady and the stock to be able to climb higher to test the next resistance at 2 ringgit, followed by 2 ringgit and 10 cent. Well, if the stock clear the 1 ringgit and 80 cent, this signals further pullback. Also, next we have Penta. So the stock experienced a breakout where it breached the resistance of 4 ringgit and 20 cent level. So if the bullish momentum to continue to trend higher at upcoming session, right? So the counter might test 4 ringgit and 40 cent followed by 4 ringgit and 55 cent. Do watch out for 4 ringgit and 5 cent support. And next we have CPE Tech, right? So the stock has, I mean, at this juncture, the stock is on its pending breakout formation above at the 87 cent. So with that, we expect that the momentum to remain bullish and the stock to propel higher to its 92 cent level, followed by 96 cent level. So keep an eye at the 80 cent level. And finally, you know that I mentioned just now, I'm expecting a positive view on telco. So we also have OCK in our trading stocks, right? So if you know, OCK is a small to mid cap a telco company that focuses on telco tower leasing, right? So okay, so now the stock has breached the 48 cent level. With that, we continue to expect the stock to propel higher towards the 51 cent level, followed by 54 cent level. Um, for now, support is back at 45 cent level, right? And lastly, for FCPO, well, it take higher. Sorry, it closes lower yesterday, so the market now expect for the production will slow in coming week while export pick up, right? So, however, at this juncture, we still remain our negative stance on the FCPO where we eye for 250 ringgit and also for 150 support level. So, yeah, we deem this as a counter trend pullback. This counter trend pullback recently is just a healthy pullback within this channel, right? So yeah, I think that's all from me, and I pass the floor to Iftaar for his presentation. Thanks and happy trading, everyone.
Hi, thank you, Aiman. So, good morning, everyone. We have a basic material sector strategy. So, we still maintain overweight on the sector, and our top pick is precious metal. On the price of aluminium, we believe that the geopolitical risk largely priced in at this juncture. Now, the LME prices have recovered to 2006 to 2007 level, and this is up 5% year to date. And moving forward, we believe that aluminium prices should remain elevated at this level, given the smaller supply in China as well as in Europe. So on the cost side of things, aluminium prices are down 50% year to date, and this makes up 12.6% of LME prices below the 5-year average of 17.6. So moving forward, we also continue to believe that aluminium prices will remain stable at this level. And this is also driven by the new 1 million ton capacity in Bintan, Indonesia. So, but given that precious metal is a net exporter, we view that the weakening of the dollar might be a slight negative for precious metal, and we note that dollar has weakened 6% against the ringgit in year to date. So, based on our analysis, a 2% dollar depreciation will lead to a 4 to 5% down in earnings numbers for precious metal, and this is assuming no hedging is done. Yep. So on cement, Malayan Cement noted that it kept its ASP flattish year on year for FY25, and this is year end June, despite seeing a gradual hikes by its peers. However, M Cement wants to keep its ASP flattish for now, as they are confident that they can garner enough margins and profitability due to the lower coal prices. And moving forward, even though MCMAC is now trading at a slightly expensive valuation compared to its peers, we believe that this is somewhat justifiable given its dominant market share of 60 to 70%. So, making it one of the biggest beneficiaries to benefit from any potential job wins in the upcoming 2026 budget announcement. Yep. So, that's all from me. We still maintain overweight on the sector. I'll pass on to the next speaker. Thank you.
Thanks, Iftaar. Let me move on to IPO note of Verdant Solar. So Verdant Solar is a solar EPCC player that mainly focuses on residential projects. Through this IPO, Verdant Solar is going to raise about 44 million ringgit, which will be used to expand their business across Peninsular Malaysia, look for M&A opportunities, and also to strengthen their working capital. We believe the company is well positioned to benefit from Malaysia accelerating solar adoption, supported by a favorable government policy and rising electricity demand. With a forecasted 11% earnings CAGR from FY25 to FY28, Verdant's valuation of 11.9 times FY27 forward PE looks attractive relative to the peers. And there are three investment highlights for this IPO. Number one, Verdant Solar is currently one of the market leaders in Malaysia's residential new built solar PV installations, holding a 10.9% market share as of 2024 based on install capacity. The company's order book now stood at 44.2 million ringgit as of June 2025, with 84% from residential projects and 16% from commercial and industrial, the CNI. And this order book will be progressively recognized over the next 6 months. And importantly, referrals made up 59% of their FY25 revenue, showing a strong customer satisfaction and a solid reputation for their quality execution. And number two, Malaysia's government supportive policy landscape. We believe the key programs under SEDA, such as the upcoming CREAM and solar ATAP schemes, together with existing incentives, will further accelerate solar PV uptake across residential and CNI segments. Nationally, installed solar PV capacity has grown from 894 megawatt in 2019 to over 2,300 megawatt in 2024, with a robust 20.9% CAGR. And number three is the ongoing property boom in Malaysia is another structural tailwind for Verdant Solar. According to the data from the Aiman report, around 98% of the households remain untapped for solar EPCC system, and this represents an addressable market worth about 88 billion ringgit. Meanwhile, property transactions in Malaysia nearly doubled from 98 billion in 2020 to 192 billion in 2024. As a result, residential new built solar PV installations are projected to grow fivefold from 333 million in 2024 to 1.7 billion by 2027. Valuation-wise, we assign a 17 times PE multiple to the FY27 forward earnings, arriving at a fair value of 44 cents. This implies a 42% upside, which reflects a 20% discount to the average forward PE of the local EPCC players due to their relatively smaller market cap. And last but not least, there are a few key risks that investors need to watch out, include the potential shift in any government incentive of the renewable energy, the lack of long-term project visibility, the volatility in solar panel prices, and intensifying competition within the EPCC market. So that's all from my side. Happy trading and see you again tomorrow.